what's up, investors? It's the Russian dude, and let's briefly immediately talk about the growing Bitcoin instability, which in fact might not be a bad thing, because some traders are extracting profits from huge volatility. So in fact this might be a pretty good time on the market for you. To begin with, the net outflows of the Bitcoin ETFs reached extremely high numbers. To be specifically, $217.6 million were outflown on April 25th, which is one of the biggest numbers in this month alone. And at the same time, the inflows into Bitcoin ETF from BlackRock, as you can see from this slide, are minimal, literally for the last several days straight. Besides this, a huge number of Bitcoin and Ethereum options were expiring recently. To just give you the exact number, $9.17 billion worth of option contracts expired, and this has basically put and call options. So as you can see, the volatility that you might be experiencing right now, the moment of watching this video or in the next couple of days, might be way higher than expected. And since we did briefly touch Ethereum for the very first time on this channel, right now there are negotiations about some of the very first Ethereum ETFs, whether they can be created or not. And apparently, most likely, they will not be approved in May, which created a lot of negative sentiment among crypto investors, once again boosting volatility while it is already high enough. Once again, guys, if some of you are crypto investors and you do extract profit from volatility, right now might be a good time to do some moves on the crypto market. But now let's talk about the main topic of this video, which is a huge problem for the US economy, Federal Reserve and Jerome Powell, which is that the inflation is no longer just not budging. It looks like that according to the most recent report, it started to climb up once again, while the interest rates are already high enough. This creates pretty much a lose-lose outcome, lose-lose scenario for the Federal Reserve. And so yes, to begin with, the key Fed inflation measure rose 2.8% in March from a year ago, which is more than expected. And this key Fed inflation measure we're talking about is the core personal consumption expenditure price index, which does, for some reason, exclude food and energy. According to the Federal Reserve, food and energy for some reason is not part of your core personal consumption. But okay, let's go with it. Anyways, it did rise by 2.8%, which is once again higher than expected. At the same time, personal spending also rose by 0.8%, while personal income only rose by 0.5%, and the personal savings rate fell to 3.2%. All of these numbers, every single one of these numbers contributes to the inflation, which is once again, the inflation itself goes up, the savings go down, the consumption increases, and the salaries are decreasing. Right here we have another interesting picture which shows historic numbers of inflation and also the Federal Reserve rate. And as you can see, when inflation already started to go up and almost all the way until it reached all the way to the top, there was almost no reaction, no movements, no actions, no nothing from the Federal Reserve. So it is no wonder we are going through the situation right now, what we see right now on the stock market and the economy in general. I mean, they did like printing money so much, they did like zero interest rates as well, they did like to give out these checks to the people of America, literally free money, but it was obvious, it was economics 101 that eventually people themselves will have to pay for those checks in terms of increased inflation, which is once again what we're going right now and looks like it might get even worse. Yes, the Federal Reserve did start increasing the interest rates, but once again they did it way too late, so it only temporarily fixed the problem. It did not solve the problem itself. Right now, we are seeing inflation, once again, not just not budging anymore, it started to slowly climb up, which basically means that the interest rates will have to stay at current high levels, or most likely they will have to go even higher, which already hurts so many industries and sectors on the US stock market. For example, first and foremost is the technological sector. It also hurts economic activity, mortgages are extremely unaffordable right now, and looks like it might get even worse. And just to also give you another interesting slide, right here are the predictions by major investment companies and so-called smart people. What do they think the interest rates will be next year? As you can see, pretty much every single one of them in general, they do think that the interest rates will go down. Unfortunately, most likely that's not gonna be the case. The interest rates will either stay or go up, which basically means that these, once again, smart people will start revising their forecasts just to confirm why people think they are smart. And so, guess which decision right now Federal Reserve and Jerome Powell is facing? So decision number one is to do nothing and hope that the problem will solve itself, which most likely it won't, and the inflation will just keep going up, hurting the regular people. Decision number two is to increase the interest rates and to suppress the economic activity even further, which not only gonna hurt regular people, especially the ones who want to buy houses, but also it will hurt the stock market and the corporations. So as you can see, there is literally no good solution right now which they're facing. It is a lose-lose scenario, which is the consequences of their way too long enjoying such easy money as they did 4 years ago. And so, what is the reaction of the regular investors like us, guys? First of all, as you can see from those two pictures, the fear and greed index on the stock market shows there is a fear right now, rightfully so, and the fear and greed index on the crypto market shows right now 70 out of 100, which is more people are bullish on crypto than before. But we are mostly focused on stocks on this channel and the economy as a whole. That is why right here is another picture which shows the optimism of investors. And as you can see, as soon as those reports that the inflation is not budging and the interest rates will have to stay high as they are right now, the optimism literally evaporated in the matter of days or weeks. Guys, please let me know down below in the comments what do you think about the current situation of the stock market. If you did find this information helpful, please subscribe and like this video. Thank you so much for watching and see you next time.